Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition. Daily market commentary. It is September the 1st. We are rounding the bend of 2020 as we are really just getting into September, October, November, December. Last 4 months. We're the last third of the year. And it is it's going to be an interesting fall in the markets, to say the least. Well, let's go ahead and do what we do every day, looking at the markets from an educational perspective, identifying breakouts and reversal opportunities and setups. Yesterday was an interesting day as we were pretty bullish in the overnights, and then our bullishness kind of waned pretty quickly. Had a little bounce in our S&P levels, but the bullishness in the S&P and the Dow Jones really waned pretty quickly. Same thing with the Russell, but the Nasdaq, it continued its march higher. Remember, by the way, that tomorrow we have a live daily market commentary, so join us tomorrow morning live, 7 a.m. Central. You bring the coffee, I'll bring the noise. Make sure that you invite your friends, tell them about it. We want to have as many people on as we can. All right, let's go ahead and get rolling. So the ES this morning, when I look at the ES, we are up about 8 points from yesterday's close. Now, looking at yesterday's level, we did get a little bit of a move away out of this zone, and we did come back down a second time, but we didn't get below the pivot, so there was no stop out point. But 1, 2, 3, 4, 5, 6 candles later, it had really gone nowhere. So in the afternoon, I mean, you had an opportunity to take about a 2-to-1 profit in the early afternoon. And so, but this pullback here, after hitting here and rallying up, and then coming all the way back down to here, and then rallying back up, and then not really going anywhere, on the second retest is when it got below that pivot. So it definitely gave you reason to either A, take your money off the table, or B, just move your stop to break even at the very least. And so looking at it now, what we're looking at in our overnight is that we did put in, on the hourly chart, a slightly lower low yesterday in the Globex. Now we've rallied up in the Globex, throughout the evening session, throughout the Globex session of trading. So we still have a continuous breakout trade above the all-time high. If we get basing at that all-time high, we've got an opportunity for a breakout trade. However, if we don't get the basing, I'm going to wait, to take the pullback of the retest. But when I look at this area now and I look for the demand below me, I got to go to a 15-minute chart to say, is there any clean levels of reversal? Is there any clean opportunities to get long? And I got to tell you, in looking at these, we start at current price. We look down and to the left to the origin of a strong move, which is where our demand would overtake supply. And we had this little region here, which was formed right there, right around the London Open. And the market came back and gave us a retest, but we've not really moved much off of that retest. You could come down to here. This is not a great time of the day. And so if you want to take this level here, this 34.95 by 34.93. That's a little 15-minute zone that you could give a little bit of credence to. The downside of there is the time of day that it was created is certainly not the best. So you're looking at a little bit more risk and exposure if you wanted to take that level. But there is a 15-minute level right in there from our Globex overnight sessions. Once again, if we get any basing in front of that level at all, it's gonna have a lot more weakness to it. But in that 15-minute, you've got a little wick over wick area right here, and you have the pivot. So I've kind of taken both inside of this line, and then let me make that much more accurate. So it would be at the very bottom of the lowest wick. That's better. All right. So 34.98, I guess, is the better number to use. 34.97.75 and 34.94. That would be our 3 3/4 points level on the 15-minute. Once again, not the best of zones because it's formed at a really rough time of day. But so if you're not comfortable with this level, because of the time of day that it's created, a good way to trade that is to maybe get into the trade with 1 or 2 micro positions, and then as it starts to rally up, then you can add to your micro positions and in order to convert it to a full mini contract. that is a way that you can trade that. Other than that, when I look for my demand below there, this is a retest of this area here to the left. This is a retest of all this noise. This is still my best demand. And so we might actually get, if we get some basing, right in this region here, you could get a little bit of a move down if we get quality basing for price to trade down below that line. Looking at the NQ, so in our NASDAQ level, on our hourly chart, now the NASDAQ was our strongest of our markets yesterday. The level that sticks out to me as the one that makes the most sense is this area of demand right here. And the reason I've wrapped my lines around this area, it's a decent time of the day, right there around the European market open, and it's the high of yesterday. So yesterday's high could also be an area where you've got some buy orders that are sitting in there that will be triggered during the regular market condition, and price can drop into this region. And you have a little lower level right here as well, which is also valid because this area here was a line of support. So a way to trade that is to say this: if we get any basing coming into this zone, I'm going to want to maybe look at this as a confirmation entry, and then this here would be my limit. So for now, I'm just going to draw this upper line, but remember, we've got to have good arrival into that zone, hoping for price to then rally higher from that level. Looking at the Russell, so the Russell yesterday, it actually came right down through what I thought was a pretty good level. I mean, it was a pretty good level. Everything was good from a structural standpoint about that zone. My 4-hour is very sideways, and so anytime you've got a reversal level in a sideways market, it's going to be a bit weaker. It then did serve as a decent reversal level for a supply trade to come back down out of that range. And so when I look at the Russell, ultimately what I see is that it's definitely our weakest market again, and has been for the last couple of days, as the rest of the markets have been pretty bullish. And an interesting thing to consider when we're looking at the Russell is that they're not taking the same benefit that the other indexes are taking from Apple's push higher, right? Apple's push higher is what, if I just pull up Apple, I mean, that's Apple's push higher yesterday really helped to propel the overall market in general. And because Apple's part of all of the markets. Now, it wasn't enough to sustain some of the rebalances in the Dow, as the Dow also came down. But the Russell doesn't benefit from that. It's the only one of our 4 indices that does not. And so by not benefiting from that, it's actually shown a lot more, stagnant price action. So with that stagnant price action, just keep an eye on the fact that we could roll over at any time in this one, and I would need quality basing before I can take that short on any of these rollovers. But we are still, keeping an eye on this one. I'm just not looking for any reversal trades on this one today. Technically, you've actually got a pretty nice wick over wick up here that both of these might be worth looking into. This one here and then this one up here. Both of those are pretty good supply levels. But in the context of a sideways trend, they're going to be lower probability. So I'm okay if you want to take them based upon your risk tolerance. Just know that they definitely represent a lot of lower probability on that trading spectrum. All right, moving to commodities. So crude oil. Crude oil, another one that we had a very sideways market. So anytime you're in that sideways market, and we spoke about the fact yesterday that the only level we had was this little one right in here. However, we had basing there just in front of the zone, right? So basing in front of the zone should invalidate that level when you take a look at it, as we had, price rallied up, we hit this candle here, had a little bit sideways here, and then we came to this region. So that really kind of turned that zone into a very weak level. Looking at it now, and then we hit that level, but we kind of went nowhere, right? It chopped around in that same 43.20 region, and right now in a sideways price market, that's going to be tough to do. So we talked about the iron condor. So any of you who took the iron condor, you had a pretty good day of theta collection yesterday, as it had gone nowhere, and that's between that 41 and 45 kind of region. That's really what it gave you yesterday, was that iron condor theta collection trade. And for now that we're going sideways, in looking at this, if I stay on the hourly chart, you've got your pivot area up here at the top, and you've got this pivot area down here at the bottom, but we're really in between this 42 quarter and 43.75 bigger range, right? That we've kind of been hovering around for a while. So inside of that range, the only way to go is to go to a 15-minute. Well, inside the 15-minute, none of these are clean enough. What I thought was frankly one of the cleaner levels didn't hold yesterday and had basing in front of it. So, if you want to look at a zone for a potential reversal, you've got to look probably nothing until about here, and even that's not the greatest, just due to the fact that we had this green candle as a retest of that area before price moving away. So that's a lot of words for me to say. If you're an options trader, that's how you trade this. Other than that, there's not a whole lot in there today. Gold yesterday, we talked about this gold as a potential breakout area. Unfortunately, we didn't get the basing, the prerequisite basing here for the breakout. We had our price moved up, but we didn't get the basing that I would normally look at for a quality entry into that position. No matter, doesn't matter that I didn't get the basing. That level is still has a breakout involved, and so I can come all the way down to here and wrap my lines around the origin of that move for a potential reversal if price comes back into that zone. This is what happens sometimes with breakouts, is that if you don't get the basing, then you look for the retest of that area. Now, we could always come back and bounce off of this 1986 and just treat that as traditional support. So I'm going to leave the line in there for those of you that want to take it off of that area of support. But that area of support is not the origin of the move. The origin of the move is down here at 1976 by 1973. So moving over to bonds and currencies, let's take a look at the ZN. So in our ZN position first, we can see that we had a level yesterday of supply, but just like we had in the S&P, we had a little bit of basing there in front of the levels. So that's typically going to be an invalidation of the zone when you see that kind of basing in front of the area. I don't know that it necessarily removed my net bearish feeling. Overall, on our 4-hour, we still look to be coming down. A little swing in here inside that overnight that we may want to consider as far as our swing highs and swing lows, although it's nothing that I'm completely sold on yet. So I'd have to look to say, does it make sense? If we get above this 139, then I definitely am saying, okay, maybe it's time to consider being a buyer. But I'm still overall net a seller when I think of this. We looked yesterday at the 30-year, which I don't normally look at the 30-year, but it had such a bigger bearish move. Now, yesterday in the 30-year, we'd had a potential area for a breakdown. Unfortunately, we didn't get the basing required, right? So what's funny is that in the reversal trade, we got too much basing for the short, and in the breakout trade, we didn't get enough basing. And so that's kind of the way to think about why basing is so important. And this is why we had price come down and then immediately come right back up, was because we just didn't have the prerequisite basing in front of the level. And so I'm still going to leave this area in here for a potential for shorts, but that potential for short would only exist if we get an opportunity somewhere right in that region here of basing. Looking at the Aussie, so in our Aussie position, we've continued to march a bit higher. The King dollar, as they say, continues to be pretty weak, and so the weakness of the dollar is going to help to continue to propel these currencies forward. And as the dollar, continues to drop, we see these currencies get a bit higher. We are seeing a little bit of momentum slowing on this way up. So that slowing of momentum on the way up would tell me that we might have an opportunity to get long on a pullback into one of these levels. This is actually a pretty clean demand area right in here at a fairly good time of day. But we could get basing somewhere in here for an opportunity to get short. So keep an eye on basing if we get a little bit more down closer to this level for a potential to trade it down into this region here for a little move. The euro yesterday, we got a pop above the euro. We talked about it getting above that high. Once again, necessitating the basing in order to take the breakout wasn't there. And if it's not there, we got to follow the rules. But the origin of that move is all the way down here. So since the origin of that move is all the way down here, we can wrap our lines around it and look for a retest back into this region here. I think that's actually a pretty good little level, 1941 by 1929. Moving to the Canadian dollar. Canadian dollar, the trend continues to be higher. And as that Canadian dollar trend is higher, the level that immediately sticks out to me is right there. That's the level that jumps out to me as the better, higher probable zone and it's right around a market open. So 76,542 by 76,484 for a reversal back down into this region. Great British Pound. Great British Pound, we did get a breakout of this level. Once again, didn't have the prerequisite basing, but that old area of resistance acted as support, and we got a strong move away. That's the same thing that I'm talking about as a potential to happen in our gold markets, right? We talked earlier about our gold breakout. I left the line in there, and so what we saw here, what we saw in the Great British Pound is what could happen there in gold. So if I go back to that Great British Pound, pull that back up, that's what we could see happen. That's exactly what happened here. That's what could happen in the gold market. So that level actually, wound up being a pretty strong reversal point. I'm still going to leave that area in place actually as a zone because of the strength of that move out of that level. There could still be some buy orders left over in that region. And then last but certainly not least is our Japanese yen trade. So in the yen, we came into the level 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So if you're in this trade, your stop should be at break even at this point. Remember, you don't have to close out the trade, but you can move your stop to break even. So your stop should be at break even at this point. I'm going to remove this line here, and if your stop is down at break even, then you've got a free trade for price to continue to run down. Don't know that it's going to go anywhere though, because we were unable to put in a new swing low on that reversal. See, if that reversal had gotten us pretty quickly to below this low, then I think you've got a clear path all the way down to here. We still have to get through here in order for price to make it down here, and so you might want to look to take some profit off the table at around this region here. If you took multiple contracts, that may be a way to take some profit off the table in that region. By the way, I was talking to somebody the other day about trading multiple contracts, and that's one of the things that we'll talk about tomorrow in the live room, is how do I trade multiple contracts and take money off the table if I only got long one contract or if I went short one contract. Well, there are ways to do it. We're just going to talk about that tomorrow. So make sure that you join us tomorrow, 7 a.m., as that's one of the things that we will cover. But if you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Hope you guys have a great day. I'll talk to you soon. See ya.